All right. Hello and welcome everyone to today's webinar, Trade Policy in 2025, 5 Critical Challenges and Compliance Strategies. We appreciate you taking the time to join us for this important discussion. I'm pleased to introduce our guest speaker, Lenny Feldman, and our moderator, Karen Rizzuto. Lenny Feldman is a managing partner at Sandler, Travis, and Rosenberg, specializing in customs and trade law with a career spanning both public and private sectors. He has advised U.S. Customs and Border Protection, Homeland Security, and Treasury on critical trade policies, including forced labor, e-commerce, and regulatory reform. He currently serves as general counsel to the National Customs Brokers and Forwarders Association of America and represents industry interest at the World Customs Organization. Our moderator, Karen Rizzuto, is the president of Roanoke Insurance Group, bringing more than 25 years of experience in the insurance industry. And since joining Roanoke in 2003, she's held leadership roles in underwriting, claims management, and operations, specializing in transportation and logistics insurance. Karen has been instrumental in developing innovative insurance products, managing complex claims, and fostering strong client relationships. A recognized industry expert, she frequently writes and speaks on insurance risk management and trade-related topics. So today's session will run for about 45 to 50 minutes with 10 minutes for Q&A. You can submit your questions at any time using the Q&A panel, but we'll address those at the end of the session. A recording of the webinar and a copy of the slides will be sent to all attendees in the next few days. And remember, this session is eligible for one NEI, CCS, MCS, CES, MES, or LCB credit. And with that, I'll turn it over to Karen to get started.
Great. Thank you, Teresa. I appreciate the introduction. Lenny, thank you so much for joining me on this call today. I'm excited for this topic. It's ever evolving, ever changing every day as we see and we look at the news. I saw something even just an hour or so ago about changes to Canada tariffs. So I think this is timely, but for everybody probably to keep in mind that it does change, it seems like, in the hour.
Absolutely.
So,
great to be here.
Your first slide, Lenny, thank you for putting this together for us. The tariff increases under the current administration, as I just mentioned, we see it change daily, but this isn't new. And so we'll take this opportunity to do a little history lesson on tariffs.
Absolutely. Well, thanks, Karen. For starters, for you and your team having me. It's always a pleasure to work with our friends and partners at Roanoke. And thanks, everyone, for joining us. From a lot of you, I see from the brokerage and forwarding community, some importers and exporters as well. Yeah, so you're right, Karen. It is a bit of a history lesson because when we learn about history, we learn about something called the Constitution, right? And the Constitution right there, that's the provision that says that Congress has the power to lay and collect taxes, duties, imposts, and excises. That's basically what customs does. And they passed general tariff legislation until the early 1930s. So a lot of folks are asking, well, can the executive branch, can one person, can the president really do all of this, when we thought, when we learned this in school, that that's something that Congress does, that the legislators do. Well, it ends up that over the years, and interestingly enough, during the Great Depression, Congress gave the executive branch power to negotiate tariff reductions, but they were within pre-approved levels. And this was through an agreement, an act in 1934. And you might remember hearing about some of the tariff acts that go back to the 1930s, and that's the era we're talking about. But then over the years, FDR was the first president who had the authority to levy tariffs and negotiate them and do it without congressional approval. But also JFK signed into law the Trade Expansion Act, and that actually allowed the president to adjust tariffs based on Section 232. Does that ring a bell? It should if you're involved with any imports for steel and aluminum. So yeah, it's been interesting to see how that's evolved. And I think the legislators sometimes might not remember or might be forgetting they do have the power to do this, but a lot of it has gone to the executive branch. And over the years, that authority has been, to an extent, shifted over to that branch, to the president, if they want to do that.
Well, we're seeing that in action today.
Yes,
so,
for sure, big time.
On a pretty frequent basis. moving along, you've talked a little bit about the mechanisms. I don't know if there's anything for you to expand on here between the difference of legislative, executive, and judicial branches, but if there's anything you want to add to this.
Yeah, thanks, Karen. The only thing I'm going to add first off is still keep your eye on the legislative ball. There's something called the pay for concept, such that if they do want to provide different types of tax reforms and reduce what they might be collecting in one side or part of the government, it might be attractive for the legislators to jump in and say, maybe we want to codify the tariffs. Maybe we want to put something into law about Section 301 or 232 or these IEEPA tariffs we're hearing about. So to balance, right, they need to pay for these reductions by collecting revenue in other ways. And the other piece, Karen, is that third bullet, judicial. Keep your eye on what's going on in the courts. We might be hearing, possibly this spring, more likely this summer, on that huge, massive case that I know a lot of our customers are involved in. It's at the Court of Appeals Federal Circuit concerning the third and fourth tranche of the first stage, if you will, of the Section 301 tariffs. Were those lawful to begin with? Did they go outside of the sphere of appropriateness, of legality for the president to issue those 301 tariffs because they got into a trade war, it seemed, with China more than really just addressing intellectual property concerns. So maybe the judicial branch, Karen, might have a very integral role to play if they were to shoot down the 301 tariffs and say, not so quick. So we'll keep an eye on that one as well. It's going to be interesting to see how those three branches kind of coexist in this new world of tariffs.
Well, and I would imagine you'd start to see the same happening for Canada and Mexico, whether it's,
Right.
trade war and the
Right.
court system will get into. So I think unfortunately, it probably will get more complicated before it gets better.
Yep, probably.
So let's talk about possible actions. Now, this is where this is really a moving target, but maybe you can run through a little bit of the mechanisms, the actions, and then the required investigation. I see on your right-hand side, you talk about the likelihood of use, and certainly the first two are kind of easy ones, but maybe we can address each one of these.
Yeah, absolutely. Thanks for that. So this was kind of the crystal ball that we were looking at pre-inauguration, right before the president took office, looking at all the tools in the tariff toolkit, so to speak, as to where they might go with some of these. And we were looking at various options, the Trade Act of 1974 being a very big one. These could be quick. Under the Trade Act. One of them is Section 122, which has not been invoked yet, but don't be surprised if we hear about it in April or maybe this spring, which allows the president to impose tariffs up to 15% for 150 days on countries which have a trade deficit. So I think we've all been hearing a lot in the news about which countries have trade deficits. Do we have trade deficits with? Where might we be looking at reciprocal tariffs? Well, the law provides for that. So 122 could be a vehicle to expand the tariffs to other countries. Well, 301 is one I think all of us have really grown familiar with, love it or hate it, maybe more so on the hated side, of course, if you're an importer. And that's one that we've seen for China. So as a result, there could be additional 301 tariffs that would be, if you will, layered on top of what was there already under the previous administrations. But if we were to use the 301 tariffs for other countries, you would need an investigation for those countries, but not for China. What's been interesting, and this is where I think a lot of the prognosticating was occurring, is this concept of IEEPA, which for years, all of us, when we think about IEEPA, which is the International Emergency Economic Powers Act, we go over to the Department of Treasury, to the OFAC, Office of Foreign Assets Control, sanctions, because this really is that type of provision. It's embargoes and sanctions, penalties for transacting with bad countries, bad parties, for example, who are very problematic to our national security, who are involved with various types of threats to technology, for example. And there could be no limitations to these actions. In comes the tariff action, the IEEPA. And let's remember, with China 301, now we're seeing these tariffs under the IEEPA law, which was 10%, now 20%. And the threat of the Canada-Mexico tariffs, which did take root for 3 days, but still we're seeing it in a different form, which we'll talk about in a few minutes. If you're outside of the USMCA, those are IEEPA. So as we said here, no, it doesn't require investigation. And we thought it was likely because this could be fast and furious, and that's what we're seeing. Some of these others here, we'll have to see if they are being leveraged at all. There's a Trade Act of 1930. There's Section 338, which means that if there's a thought that there is any type of discrimination of certain countries against trade with us, for example, China could be used, or if we were to ban imports and, for example, another country would benefit from the action. Let's say we ban China, product moves to Vietnam or Cambodia, that benefits Vietnam and Cambodia because their exports to the US increase. They could be benefiting from our action against China, and in turn, they could come under these 338 tariffs. It's almost like a cascading effect. Is it going to be necessary? I don't know. With the other ones I mentioned, with the 122, 301, the IEEPA, that might be more than enough for us to, work with, but that's possible as well. Then at the end of the day, we have to see if those column one rates of duty, those what are typically those MFN rates for China, might go to the punishment, the PNTR rate, which would increase the tariffs at that level. We'll have to see if those would be changed. That's what we see for Russia, North Korea, Cuba, and see if there are any 201 actions. Those do require investigation. That's really where we saw solar play out because that was very specific. We usually see anti-dumping, countervailing duty actions in those areas too. So Karen, who knows what we might be seeing coming down the road. I think those first few we see already in play, but there could be other permutations of this as we look at what the reciprocal trade policy brings to bear in the next few months.
Yeah, it's a little hard to follow, and I'm sure everybody can kind of appreciate that just because it changes so quickly.
Yep, for sure.
The last comment here about Mexico being more exposed to immigration fentanyl traffic across control across the borders. The same is true then of us. So I think it's just day to day.
Absolutely.
So looking at the regulatory freeze, that was pending review from January 20th, and I'm not sure what updates may have happened since then. Maybe you could provide us with a little status update.
Yeah, absolutely. So I think what we're seeing fast and furious, as I've been mentioning, are those executive orders, those memorandums that are then making their way into Federal Register notices from the White House. What you're not seeing are new regulatory issues or proposed rulemakings that are coming out from CBP, DHS, and Treasury, because on pretty much the first day of office, the administration, the president said, let's take a freeze, let's take a pause. I don't want to see any new rules that are going to be written unless they're reviewed and approved by the newly appointed or designated department or agency head. Now, some of those have more recently come into play, where you have, of course, Kristi Noem at DHS. You have the Commerce Secretary now, Howard Lutnick, in place. We're waiting for the CBP Commissioner to be confirmed, but you're not probably going to see any new rulemakings as a result of this freeze. Anything that was not published in the Federal Register for review, it needs to be withdrawn so that they could take a look at it. And it said it was worded as a consideration, not a mandate, but I think at all intents and purposes, it is a mandate, postponing for 60 days any effective dates for published rules, opening up the comment period for a longer time, maybe even continuing reviewing questions regarding the law and policy that's suggested, and providing for further notice and comment. So really taking a pause, Karen, and what's out there. If there is anything out there and it has not been rescinded, our position is, hey, put your comments out there, and we'll talk about that in the de minimis space, because I think that's kind of one that's in limbo right now in a very big way.
Yeah.
But other than that, we're not seeing no rules. And you know what? We saw this under Biden. We saw it under Trump. This is not uncommon when a new official comes into play and says, hey, I'm restaffing these agencies and departments. I want my leaders to take a look at it.
Yeah, well, right. They want their leaders to take a look at it, and maybe there'll be even reductions. I mean, who knows? I don't know. Who knows what it will lead to?
Yeah, exactly. They really, on the one hand, want to reduce the regulatory burden and say, hey, if you as an agency want to issue new regulations, you better take away, 2, 3, 5 of them in order to match that.
Yeah. Okay, this I think is really important. I'm not sure, how familiar everybody is with the America First trade policy. It's a good time probably to summarize what you've seen from the America First trade policy, because it's really important for our clients to know this as well.
Yeah, this is really key. This came out also right around inauguration. It was a memorandum, if you will, not executive order, but a memorandum from the White House to a group of the government, a wider range, a array, so to speak, of departments. It was Department of State and Treasury, Defense, Commerce, Homeland Security, Office of Management and Budget, USTR, as well as to the Assistant to the President for Economic Policy, to the Senior Counsel for Trade and Manufacturing, and it said, hey, I need you all to gather all your thought leaders, so to speak, under your new leadership. And I'm going to require you to provide reports and to review and investigate and provide findings and recommendations by April 1st, in some cases April 30th, on all of these issues. And you could see in this kind of one-stop shop, I guess you could say, slide that we created, the lead agencies are really across the board, and the actions are really interesting. Everything ranging from the trade balance to the creation of the External Revenue Service that Treasury is looking at unfair trade practices. That's really what USTR is considering for the reciprocal tariff concept that a lot of folks have been asking about. And over at USTR, I don't know if some of you have been able to read that notice. It's not too long, but it actually says, hey, we need you to tell us what countries are posing unfair trade practices. Maybe they have non-tariff trade barriers in place that are costing you money in addition to the tariffs, those VATs that are being spoken about as well that provide an additional fee for our exports to clear customs in those jurisdictions. Tell us specifically about those countries so we could see what we do from a reciprocal standpoint. How is USMCA working? We want USTR to look at that. Looking as well at the existing trade agreements that are in place currently. I think some of those may be considered as the next tier. Looking at the AD/CVD process, de minimis. There are several now departments and agencies who are looking at the future of de minimis and looking at what seems to be the proper path forward for that. There's Buy America that's coming into play as well. Which is big now, the Buy America rules. What really should we be looking at if you do have certain foreign components that are being substantially transformed? Should they qualify? China, of course, I think that is really going to be looked at super carefully in this administration and part of this report, as well as looking at the Section 232 investigations and exclusions and export controls, and even various types of subsidy and outbound investment reviews as well. So Karen, all of these, for the most part, are due in, as you could see, April 1st, with the exception of maybe one or two of them where the report's due April 30th. And I think as a result, we're going to see some additional, if we haven't had enough excitement already, additional trade activity and executive orders and memorandums coming out in that April, May, June timeframe. Maybe not just focused, in my opinion, on China, Canada, and Mexico, but branching out to other countries in other ways. And again, it really is about America First. If you speak with any of the executive teams at these agencies and departments, they are super focused on this America First trade policy, Karen, and on the whole concept of national security, economic security, creating a level playing field, and building manufacturing jobs in the U.S. I just heard this at the quarterly COAC meeting just last week in Atlanta, and pretty much every departmental agency leader mentioned these phrases and words in their remarks. It was really interesting, Karen.
Yeah, I'm sure that is the catchphrase, and you hear it all the time. America first, America first. And April 1st is obviously an important date in those, days and months to follow. I would expect some of these things to roll out, over the course of maybe the year. Maybe some have a report that comes back that they don't do anything, but I'm, sure we'll see a lot of change as a result.
Absolutely. I mean, maybe, Karen, the theme is April 1st for America First, right? We'll have to see what it looks like.
Yeah, absolutely. Well, we might as well go and move on to country specific. So why don't we start with China? And this has been a lot of back and forth. And this is as of February 4th of 2025. So maybe we can walk through some of the executive orders today for China and the proclamations that have been issued?
Sure. Yeah, let's break this up. We're going to break it up: China, Mexico, Canada, and steel and aluminum, of course. Mexico and Canada have been on this really wild track, somewhat parallel. China is just kind of still in its own bucket. And Karen, the way I
Yeah.
think of it, what are those things sometimes like you put those little sponges in the water and it just takes on the water and it grows and grows, right, into one of
That
those,
is yes, yes.
uh, what are those?
I
You know
don't
what
know
I
what
mean?
that's called. Yes,
You
I
know,
do know what you
you
mean.
know what
With
I mean? Maybe,
animals that you put water,
right?
yeah,
So that's
yeah,
kind of
yeah.
what I think's happening with China. It's just sponging up, and we'll talk about this maybe with bonds in a few minutes too, as the bonds get sponged up as well and get
Yep.
saturated, right? But China, it's just growing and growing with the tariffs because we had the 301s in play, and again, it was both Trump and Biden. It just grew over time. And there was an exclusion process in place. Those exclusions are basically sunsetting for most part this spring. There's some for machinery. Those are going to be sunsetting. There are others in play. We don't think that they're going to be extended. And on top of the 301 tariffs, which of course range from 7.5% to 25% on top of the base tariff, there was the first 10% now going to the IEPA part of it, but then that got changed to 20%. So on March 30th, I'm sorry, on March 3rd, that was the executive order where it moved up to 20% for 10% for any goods that were entered for consumption or withdrawn from warehouse for consumption by 1201 EST March 4th. As you know, there was the original IEPA that came into play February 4th. There was a bit of what's called a savings clause that if you get your goods loaded on board the vessel from Hong Kong, China, early enough, then you would be able to then by March 7th, if you loaded it February 1st, and if you entered by March 7th, you'd be able to escape the first round of the 10%. However, then it became 20% without some type of savings clause, as we called it, and it wasn't retroactive though, Karen. Right? If you were paying the 10% up to that March 4th time period, you don't go back and say, okay, now let's add another 10% to what we previously saw. It was 10% kind of in that, let's call it that first time period or tranche, then everything became 20%. Okay, and from there we saw that it was really affecting pretty much all goods, all products of China and Hong Kong. There are a few exceptions for informational materials, which we have heard. And by the way, this is really important, Karen. Just, I want to say yesterday, it might have been the day before, but I caught it yesterday. CBP put out some frequently asked questions on the IEPA tariffs. I'm actually proud to say, in working with the National Customs Brokers and Freight Forwarders Association, these were questions that we asked and indicated to CBP we wanted answered. And it goes into a little bit of the detail about that savings clause, what are informational materials. To our pleasure, I guess you could say, CBP did provide the tariff numbers that are going to be included as informational materials, donations. They said, hey, be careful, make sure you take a reasonable approach. These are the kinds of things, Karen, that are excluded from the IEPAs across the board, not only China, but on Mexico and Canada, that you need to be aware of, and we've been getting a lot of questions about. So that in Chapter 98, that's available as well. If you have a U.S. component, let's say for whatever reason it was shipped to China for repairs or alterations, came back, that U.S. value, that U.S. component would escape, as I like to say, the China tariff. So I think what was tricky for people was the fact that we were at a 10% and then a 20%, and folks were wondering if it's retroactive. It isn't, and how about some of those exclusions? But that's where we are right now, and don't be surprised if we go up even further from the 301
Yeah.
plus the 20%. But that's where we are at this moment, Karen.
Yeah, no, that's good information because we've had a lot of questions about that too, if it was retroactive and just
Yeah.
knowing what the exclusions are. So it's good information for sure.
Yeah,
Let's,
absolutely.
let's turn our efforts now and focus on Mexico a bit, where we're at today.
Mexico and Canada are two trading partners, right? I mean, this is just unprecedented. We've really seen these two countries as part of a strong North American trade bloc. Um, I think, as I've been predicting, and so far I'm right, but I'm not going to say I'm going to be right in April or May. It's the art of the trade deal. It's the art of the trade deal, right, Karen? That here we go. It's the threat of a tariff the first round, and then at the 11th hour, first Mexico and then Canada, a deal is struck. Okay, they're going to bring tens of thousands of guards to stop the flow of fentanyl. Canada's going to appoint a fentanyl czar. I could tell you from being, Karen, I was just at the Laredo border about a week ago, and I've never seen it like this. I mean, Mexico was really stopping to inspect just about everything coming into the US, as well as I have a video of it from my phone, a mile and a half of just trucks on the US side waiting to get in. They were very, if you will, cautious about what was coming into Mexico, but particularly what was coming out of Mexico into the US to make due on their promise to the administration. There have been leaders from the cartels that were extradited to the US so that they are um, very clearly going to be brought to justice, not necessarily always the case in Mexico. And the migrant flows I'm hearing across the board have never been lower, pretty much. So it seems like on the Mexico side, and I'm hearing some similar, beefing up, security at the border from Canada, although I haven't been there as recently. It seems like there are changes there. So with Mexico, yes, there was an amendment once we saw that March 4th IEPA was taking effect, the second round, after the 3 days to say, wait, as of March 7th, you're okay, and you're going to, as I say, escape the IEPA if your goods qualify for USMCA. So you avoid the 25%. Well, what happens if you've been importing produce from Mexico, for example? It's been an unconditionally duty-free rate. It's a zero in the tariff. It's always been zero. A lot of importers are saying, I'm not going to bother to get my USMCA certificate. I'm not going to bother to make the claim. But now we're advising importers and their brokers, please go ahead, make the claim. Use that special program indicator of S. Even if you haven't in the past, you could have used it to avail yourself of the merchandise processing fee, meaning that you would be exempt from it. But now we're saying until we know for certain, go ahead and provide that S designation so it doesn't default to a 25%, or CBP doesn't come back and say, we're sorry, we know this was duty free, and we know that intuitively all these years you would have said, why do I need USMCA? But now stake your claim, make sure that it's there by providing that S indicator. And again, the surprise for Mexico and Canada, so you could show you qualify, and you, at least for the time being, because we have to see where it goes, as long as you have that certificate in play, you are able, in fact, to make that claim. And don't worry, folks, if you didn't have that certificate in place on day one, you can have, under the rules, it's a free form certificate for Canada and Mexico, as long as you have all the data elements and as long as the producer, exporter, and even the importer, but I prefer producer as the main source, provides that and says, here is my it's like an affidavit, so to speak, but here is my representation or attestation that we qualify for USMCA blanket certificate for this year. You should be okay. So this is really an important piece of advice, Karen, that we're advising our broker friends and importers to make that claim, make that designation, even if you need to go into the system and it's a bit of a manual process and it might not be there to begin with.
Yeah, does it take long to get the certificate? This is really valuable information for everyone listening in. And is it a quick, you fill it out and you almost get it instantaneously, or is there a waiting period?
It depends. If it's something like, if we want to go back to the produce example, it's completely grown or harvested, or you have like minerals that are mined there, right, that are coming over, that pretty much should be something, hey, here are the data elements. I prefer for the importer to, if they're unfamiliar with the certificate, the producer exporter, typically they should be familiar with it. Just provide it to them in a Word document and let them sign it, really make sure you do it right. That could be a matter of a few minutes just to fill out their certificate. Now, if you're bringing in a complex machine or some type of motor, something that's more technical, and you have foreign components coming in, let's say from China or elsewhere, that might take a little bit more time and homework to make sure that you qualify. But those are the types of articles, because they're more technical and they involve components and parts from other countries, that probably you've done that homework already. Probably you're already claiming USMCA. But if not, that might take a little bit more effort. That might take a few days, if not more, just to kind of go through it, see if you have the right tariff shifts there, or you have the right regional value content to make that certificate. Because at the end of the day, I don't want anyone going out and just writing out certificates that are false or wrong. You really want to make sure that
Yeah.
you have the right to to provide that certificate to begin with.
I just noticing we've got a couple of questions that I feel like maybe we should answer on the fly because they're related,
Sure.
country-specific related questions. So I'm going to flip back for 1 second to the China slide and address the question. Has there
Yeah.
been any further clarification of what specific goods and on the HTS number would qualify for the China IEPA exemption under 9903.01.22?
And which I just want to know which I don't have that exemption number in front of me, so I want to know which exemption they're talking about if somebody has that.
Don't either. If that person could put that in the chat or in the Q&A, that would be great, and I could relay that back to you.
I just want to make sure I have the right one. 91 articles that are informational materials. I pulled it up. Yeah, I thought that was, but I wasn't sure because there's so many numbers, Karen, with 99 floating in my head. I don't want to talk about the wrong one. I was able to find it, and that is the informational. Yeah, it is the informational material. Thank you, John. And yeah, John, and I want to make sure everyone knows this. There is really good clarification now. I'm happy to say I would not have been able to say this a few days ago on the cbp.gov website, IEPA. FAQs, and they went as far to give tariff provisions. So please take a look at that. This is, I don't, I'm one step short, Karen, of saying it's like breaking news, right? Because a lot of people have been worried about this, but IEPA is tricky because IEPA, as I mentioned, it's sanctions, it's technology, it's a wartime type statute. So we were worried that they would interpret it in a very narrow way, the way they do for like First Amendment type speech. That's the way it was worded in the IEPA statute. But when we spoke to CBP informally, they said, hey, look, it mentions informational materials, including but not limited to. So we started getting the feeling, Karen, from CBP that they're going to look at it in a little bit more of a broad way. And sure enough, they came out with that FAQ. So find that FAQ, get your tariff numbers there, and then reach out, back to Roanoke or us if you have questions or something's not clear. But I think that's really going to be helpful for you, John, and the other people who are focusing on that information material, the books, the publications, and even stuff in other chapters. Like I think there was even like textile banners or things like that might have been even included. So take a careful look. It's interesting.
Yeah, and let me move on then to a question with regards to Mexico. During the March 4th to March 6th period, was the 25% tariff sweeping, or were USMCA products excluded, or did the exclusion become effective on March 7th?
And this is for what country?
Mexico.
For Mexico, yeah. Yeah, so what happened with Mexico was that you didn't have the retroactive, right? It was not going to be retroactively, meaning to be exempt from it. So for those 3 days, 4th to the 7th, you are pretty much stuck paying the 25%. Now, it's interesting how you might interpret that, because there are different ways under the statute 141.68 and 69 that interpret what is your date of entry for the purpose of assessing the tariff. And you're pretty much going to look at when the merchandise arrives into the customs territory of the United States. That's pretty much going to be it. Although there are occasions where you might be able to elect a different date, but pretty much when you do that, we see this more in the vessel context, that maybe you got your entry documentation in prior to arrival, the vessel came in, let's say, Port of LA, and again, this might not apply as much from Mexico or Canada, but there is some vessel traffic, right, Karen? It's not always just land, but right? So that's where it gets kind of tricky. And if you were able to say, hey, although maybe physically the goods weren't released for a few days later, but you are able to make the claim that, hey, the vessel arrived with its intent to unlade, you need the intent to unlade for vessel, not for necessarily the other modes, you may be able to elect with your broker that earlier date of arrival and entry. It's possible. So again, it's not a one size fits all. If you look at 140, 168, 69, you're going to see there's different language in there. There's even some language in there that says if the executive order specifies a certain date for entry, you're going to use that. And here it's mentioning entry summary. And so it's a double-edged sword. Depending on which language you use, it could help you avoid the tariffs in those 3 days. But on the other hand, it could kind of put you back into it, because whether you were late or whether you were early. So look at those dates, look at those regs. Your broker should be good with that. It does we've asked CBP for additional guidance on this issue over the years, because sometimes it's really up to the mercy of the vessel master to say, okay, now I'm reporting in my arrival. I've been sitting in the port for a day or two, but oh, I didn't get around to reporting it for another day or two. So does that become the actual date? That's why this is difficult, Karen. And that's why I think there's some people who are just stuck paying the 25% for those 3 days, regardless, either way.
Yeah, it's challenge, more challenges.
More challenges. Yeah.
Moving along to Canada. What can you pull out from this that we all should be made aware of at this time? I was seeing stuff on the news today about the retaliation tariffs, so electricity, EV, all that kind of good stuff.
Yeah, I think a lot of my comments for Mexico are going to be applicable to Canada. You're going to see, for example, they've been focusing on the energy and energy resources tariff of 10%, as well as the 25% on all other products of Canada. The 10% tariff on energy imports from Canada applies to crude oil, natural gas, natural gas liquids. The 25% was all over the other tariffs. They still have the exemptions for donations and informational materials. This has just really been a wild ride. Looking at Canada, the indication there that sure, with the exception of those 3 days, if you qualify for USMCA, for the most part, you're going to be okay with those tariffs. Not all of them, of course, but USMCA qualifying is going to be okay. But Karen, I think, like you said, the name of the game here is going to be the retaliation we're seeing. And it sounds like as a result, Trump is ready to go back and put more tariffs on some of their products, because this seems to be evolving into a real trade war. It's different styles. He seems to be very complimentary of Sheinbaum and their friends, and they're working together. Trudeau, I don't know if I think it's fair to say maybe no love lost there. But as you see, new prime minister coming into play, at least from the liberal side, right?
Absolutely.
So that could be changing. I don't know if it's going to change for the worse or not, but it's going to be very interesting to see what the Mexico versus Canada tariffs look like a month or 2 or 3 down the road, because it seems to an extent they're going down different trajectories right now.
So. Yeah, let's switch gears. Still on the topic, of course, but steel and aluminum, what you see from that, what we should be on the lookout for, and what we can expect.
Yeah, so the thing here, first and foremost, I think everyone understands this is another, as I call, a layer of the tariff sandwich, which if pick your poison, right? Whether it's the Big Mac or it's going to be the Whopper, those big sandwiches that I don't eat anymore, but I wish I did sometimes. I think I need one. But all those layers, it's getting bigger and bigger, these tariff layers, and I'm describing it like a big burger or sandwich that you just can't digest. Steel and aluminum is another one on top of what we've just been talking about. So this one is not being negotiated. This one is not going to be, hey, you had to pay it for 3 days, but then we reached an agreement. We're not seeing that. It is coming in as of March 12th. Mexico, Canada, the countries where we had, if you will, stayed the steel and aluminum tariffs up to this point. Of course, aluminum was sitting in a better spot at 10%. Now it's going up to 25%, March 12th. And these came out February 10th, these separate proclamations to broaden and increase the 232 tariffs. And until March 12th, so through today, folks, you have a few more hours to get your aluminum in at 10%. 25%, of course, for steel. And these included initially a list of steel products, and we call it the original derivatives or the old derivatives, whatever you want to call it. And then effective at midnight, or I should say 12:01 to be accurate, right? Depending on how you count midnight. They remain 25% for the steel products. They increased to 25% for the aluminum products on all those previous lists. And then there's going to be the 25% on the additional steel derivatives that were listed as an annex to the February 10th notice. So now this is what we call the new derivatives or the additional derivatives. However, not all of those are going to be in place as of March 12th, all of those new steel and aluminum derivatives. However, if you're in chapter 73 or 76, those are good to go. Those are going to be hitting in in about how many hours here, like 10 hours, 11 hours. They're going to be hitting for anything in 73 or 76. The other ones we still have to wait and see that there is an appropriate process in place to collect the duties effectively and efficiently. But everything else, as I understand it, is going into play 25%. And it's going to be tricky, folks, for anyone who is dealing with aluminum extrusions, ADCVD, where you have to break out the value of that extrusion, of that component, that subassembly. It's going to be the same game with the derivatives, right? For the new derivatives in 73 and 76 to really parse that out by way of some type of invoice or documentation that shows what that value is, although you're going to have to list both the value and you're also going to have to list the weight. But value is really going to be key in splitting these up over the various tariff lines that are now going to be required. So this is going to be confusing, Karen, for brokers. My heart goes out to you on all of this, but on steel and aluminum, it's something you have to really be careful for to advise your clients properly, to declare it properly so you avoid certain types of pitfalls.
And I think we have an example here. You're going to run through of a stainless steel calendar and the classification.
Yeah, absolutely. And this was one made of stainless steel, assuming it's from China. We could go through these quickly, Karen, so we get some of the other
Yep.
questions. This is where
Yep.
it's going to be classified in 7323, 930060. Exactly. Here you see the ordinary duties. Here's my big tariff burger or sandwich. Starts with 2%, not covered in this example, 301. IEEPA is 20%, the 232 is 25%. This could be 40% at the end of the day, maybe even more if it was covered by 301. So all of you need to, per the CSMS, make sure that you add all those tariffs in and not miss them for your clients.
Yeah,
Okay.
absolutely. We've got a couple questions coming in back on Mexico about the effective date, the 3/7. It's a story about, the cargo as USMCA cert, it was told 25% effective 3/4. New tariff did not go into effect till 3/7, 12:01 a.m. At 0%, client has duty-free cargo that now is 25% at 125,000 duties. How can this be protested? Press release by the president indicated retroactive to the 4th. Customs advised not retroactive. Crossing is on the 6th. So I guess this goes back to your comment about vessel sailing.
Yeah, if the vessel's a good example, but if it's by land as well, what do you have on record is the date that it crossed and then the date that you're using for your your entry date. Is it the 6th, which you don't want it to be? Is it the 7th or 8th, which you do want it to be? And those are really going to have to be case by case. And if you feel, by the way, if CBP is not giving you a fair shake, I think, Karen, you mentioned the word protest. I would go with the post summary correction to see if there's something that can be done.
Yeah.
Unfortunately, you really can't cancel entries. There's CSMS messages out there that say you can't cancel an entry just for the benefit of a favorable tariff or duty rate. But if you could find a legitimate reason to cancel the entry, might be okay. So.
Yeah. I think that's a really good advice. I think post summary correction, I agree with that completely. You got to start there and then see what happens when you file that.
Yep.
Let's just move along real quickly to, avoiding tariffs.
Yeah, I mean, look, and I'm going to go quickly, Karen, because I know we might want to talk about bonding for a minute and get some of your pearls of wisdom, right? But tariff engineering, make sure you're classifying properly anyway. That could make or break some of these. And again, with the informational materials, are you classifying it in the right provision so that you're covered by some of these exclusions? Origin, getting lots of questions on origin, Mexico origin versus China origin. Is it substantial transformation for Mexico, or is it the Part 102 rules, which it's really not that clear. If if potentially you could say, hey, I have to pay China and Mexico because I have a substantial transformation in China, but I qualify, unfortunately, for origin in Mexico and I'm not USMCA, it could get really wacky. So really look at your origin rules. I think more so looking at, like, I'm getting questions about Vietnam, Cambodia. Is it a product of those countries as opposed to China? Take a really careful look at that. We're still working on advocacy to see if there's any way that the legislators, because remember, as I said in the beginning, by way of the Constitution, they still have the right to decide and issue legislation on these laws. So we're advocating, and if any of you are involved in associations or businesses that might be interested in that, that's always a possibility. And the exclusions and coalitions, those are really going to be tough. As I mentioned, there's still an opportunity for exclusions for machinery in 8485 through the end of the month, but those are only at this point guaranteed to be good to the end of May. But man, that might be helpful in ways that people never anticipated. So those are some of the ways to avoid the tariffs.
Yeah, and I think actually too, we talked about post-summary corrections a little bit too. You know,
Yeah.
Sandler Travis Rosenberg offers a regulatory defense program through Roanoke. It's not an insurance product, but it's prepaid legal assistance for claims that arise from a government agency or department. You know, that's a way in which a client, a custom broker, can protect themselves just by the purchase of that program as well. And then, you know, something important to note, Kate, it's just a reminder about E&O insurance and how important it is for customers to have E&O in place at the appropriate levels. I, like to say that 100,000 probably is too low of a limit at this day and time, because it too plays for defense where you're being held legally liable for a loss based on the documentation you've issued. And, in some of these cases, you could see where the impact to misclassifying something could be very big, and you could spend a lot of money to defend your position.
Sure, absolutely. I think now you really got to take stock, especially as a broker, because the stakes have never been higher. As I mentioned in my tariff burger or tariff sandwich, you miss any of those lines, you may have a claim against you, not only from the government, regulatory defense, but also from your customer. And it's going to cost a lot, from my experience, just to defend yourselves when it comes to those types of claims. We love working with Roanoke on the regulatory defense program, because that's basically just locking in your premiums to provide you with the legal representation you may need. And sometimes we just are able to advise, hey, take this route, follow this post-summary correction, make this argument, follow the protest this way. And then you might able to, as you were saying, Karen, avoid the tariffs or mitigate those tariffs that initially you thought were going to be higher than they were. Some of the questions that we're seeing today, just about what's that proper date of entry, and can I claim it under a post-summary correction or under a protest. I think those are all the strategies that you really need to be employing now, and as this changes down the road, because it's just in such a state of flux. And I think the importers are really expecting the broker to put on their Superman or Superwoman cape and say, oh, I haven't answered all these questions. But you just can't be expected to, especially you can't prognosticate that. And there was no way a broker could have advised, hey, if you get your merchandise in before March 4th or after March 7th, you're going to be in good shape. I actually, Karen, had an importer upset with their broker because the broker filed the entry during that time period when the duties were owed. How is the broker supposed to know for those 3 days that would have been the small time period when the 25% would have applied?
Yeah, that's so difficult.
So,
yeah, absolutely. Yeah, that's exactly why you want the defense. We get asked a lot too about how to calculate, the size of the bond that you need. But this is a really difficult question right now to be able to answer for anybody. For a custom broker, their business changes, every year, and it depends on your business plan and what you're targeting. Do you have a lot of goods that are coming from, clients that have goods coming from, China, Canada, Mexico? Are they steel products? Are they, is it wood? It varies. So it's kind of hard to determine, what size bond you would need. We do get insufficiencies reported to us by Customs. They come to us for continuous bonds on the first Friday of every month, and then single entry is daily. So they let us know what those insufficiency amounts are, and then we report those back to our, custom broker clients.
Yeah, I'm getting so many questions on that, and we usually get it with AD/CVD, but now with all these
Yeah.
tariffs, is the bond sufficient? And Karen, you probably would be able to answer this better than me, but probably within what? It could be a few months of these tariffs going into play. CBP may say, "Hey, bond cancellation, you're saturated. You're going to need a higher
Okay.
bond," and then right, and
Yeah.
then the stacking starts occurring. And I think every broker really needs to have a really strong handle on what does bond saturation mean, what does bond stacking mean. So you're really working with your importers to identify this. I think you guys have this really good, easy um,
Yeah.
bond
Calculator. Yeah.
calculator, right? Which I've
Yeah.
been telling
Yeah. We should.
brokers use it, and I've been telling importers work with your broker for that bond calculator. I got this question from a toy company last week that was asking, they never had duties on their products. Now they went from 10 to 20% from China. What kind of bond should we get? And I say, get one that's going to cover you for not only 20%, but someone on the call said, I heard it's going to be 30%. Well, maybe assume it's 30%. So your new bond isn't saturated and 4 months down the road, and then they're stacking on top of each other. And I think, Karen, you and your team have always been advising, I think very, very well and adeptly, hey, make sure that your bond is going to carry you through, at least a year, hopefully, if not the majority of that year, so you don't have to come back and get another bond to stack, right?
Yeah, absolutely. And you one of the things too, you mentioned the stainless steel colander as an example. That was an additional 47%. So using just that one
Right,
item as an
right.
example, an additional 47%, you can imagine what that'll do for your the value of your bond and what you need going
Big time.
forward.
And really quickly,
We
right? Yeah, yeah.
yeah. Yeah, we only have a couple of minutes left here, and we only actually have a couple of slides left, but I probably want to spend some time. We talked a little bit about mitigating tariffs, and maybe it would be good in the last couple of minutes just to talk about de minimis, because I think a lot of people have
Sure.
questions about it. Maybe it's worth noting here.
Yeah, real quick as I pivot, off the tariff programs like mitigating, just to tell everyone today, we're getting a lot of questions about first sale. And whether you're going to base that in a two sale structure, or maybe you just have a one sale structure for your client, but you could actually create that sale. A lot of companies don't know that. That's really a hot question right now. Be aware of what first sale is, when you can and cannot do it, but understand that even if you just have the one sale, that sometimes you're able to create that second sale that's completely legal. And although customs doesn't love it, but it works. And additional types of value deductions that could be made as well. Charges such as shipping charges, unrelated charges to be taken out. Getting a lot of questions on that. De minimis, that next slide. Um, Ironically, de minimis is kind of the eye in the middle of the storm right now. That although de minimis again wasn't allowed for those first few days in February, um, then there was that reversal, right? Because apparently Postal really wasn't able to provide the data and the payments that were necessary on those small packages that now would be going to the informal or formal entry environment, since de minimis was not going to be allowed for China. There are notices of proposed rulemakings that are still out, despite the freeze that I mentioned, that were issued January 14th and 21st, which are due in, I believe, respectively, the 17th and the 24th. So that's coming down to the wire to next week. And I encourage everyone to comment on de minimis, and don't just comment on what is proposed in the four corners of those documents. That's good, you should do that. But what do you think de minimis could look like? What might de minimis look like if you have products that are de minimis in value, less than $800, but they do have to pay duties? Should there be a special lane for them? Should they incur some type of flat rate, maybe, if the government is going to collect tariffs on it? What is within the art of the possible for small package trade of a de minimis value, even though it may or may not be facing duties to one extent or another? So that's really going to be interesting to see where the government goes with that. And I think the writing's on the wall that de minimis is not going to look the same much longer. And I
Yeah.
think most of us practitioners and people in the folks in the trade feel it's probably going to go away pretty soon.
Yeah, I think so too.
Yep.
This is our last slide, and we're coming up on the hour. Maybe it's a last comment on this slide, and then parting words for our group.
Yeah, I mean, we talked about post-entry, so I think we could check that box, Karen, about the post-summary corrections protest. Be wary of that and those opportunities, especially for those 3 days, and they're off again, on again tariffs. That's where you really have to be vigilant and don't miss those opportunities for your clients. And believe it or not, you still have an opportunity, your clients do, to be part of the 301 litigation, where the stakes are just getting higher month by month with these 301 tariffs that continue to be paid as funny enough, Karen, I almost describe it as a base tariff on which the IEEPA and the steel and aluminum and AD/CVD is being built upon. But importers could still go in and take advantage of hopefully what will be a favorable decision from the Court of Appeals Federal Circuit as early as this spring or summer. Will it go up to the Supreme Court? A few months ago, I would have said, probably not. Now, with tariffs on everyone's mind, don't be surprised if the Supreme Court might take a look at this case as well, because it's going to have such a precedential effect for the way a lot of these tariffs have been levied. But again, moral of the story, you still can get in there if you haven't already, believe it or not. So think about that for your importer clients.
Well, Lenny, it's been great spending this hour with you. I hope everybody on the call has appreciated your comments. I know I have. On behalf of myself and Lenny and Sandler Travis Rosenberg, Roanoke Insurance Group, thank you all very much for attending. We look forward to you joining our next presentation. Have a great afternoon.
Thank you, everybody. And Karen, again, thanks for the opportunity. It was a real pleasure. I hope it was helpful.
Absolutely. Thank you. Thanks, everyone.
Take care.